Welcome! Today, we're diving into the world of credit reports, focusing specifically on hard inquiries. If you've ever applied for a loan, credit card, or even a mortgage, you might have heard the term hard inquiry. But what does it really mean? And how does it affect your credit score? In this video, we'll break down the basics, explain the difference between hard and soft inquiries, and help you understand why hard inquiries matter. Let's start by defining what a hard inquiry is and why lenders use them when you apply for new credit. A hard inquiry, also known as a hard pull, occurs when a lender or creditor checks your credit report as part of their decision-making process. This typically happens when you apply for a new credit card, a car loan, or a mortgage. The lender wants to assess your creditworthiness and determine if you're a reliable borrower. Unlike soft inquiries, which don't affect your credit score, hard inquiries are recorded on your credit report and can impact your score. Understanding this distinction is crucial for anyone managing their credit. It's important to distinguish between hard and soft inquiries. Soft inquiries happen when you check your own credit or when a company pre-approves you for an offer. These don't affect your score. Hard inquiries, on the other hand, are initiated by lenders when you actively apply for credit. Because they signal that you're seeking new debt, hard inquiries can slightly lower your credit score. Knowing the difference helps you make informed decisions about when and how to apply for credit. Hard inquiries occur whenever you apply for new credit. This includes credit cards, car loans, mortgages, and even some apartment rentals. Lenders want to know if you're a trustworthy borrower, so they check your credit history. Each application triggers a hard inquiry, which is then noted on your credit report. Being aware of when hard inquiries happen can help you avoid unnecessary hits to your credit score. Hard inquiries can cause a temporary dip in your credit score. The effect is usually minor, but if you have several hard inquiries in a short period, lenders may see you as a riskier borrower. This is because multiple applications suggest you're actively seeking new debt. However, the impact fades over time, and responsible credit management can help you recover quickly. Let's explore how much your score might drop and why. Typically, a single hard inquiry will lower your credit score by just a few points, often less than 5. The exact impact depends on your overall credit profile. If you have a strong credit history, the effect may be negligible. However, if your credit is already fragile, even a small drop can matter. It's important to monitor your credit and avoid unnecessary applications to minimize the impact. A hard inquiry stays on your credit report for up to 2 years. However, its effect on your credit score diminishes after the first few months. Lenders typically focus on recent inquiries when evaluating your creditworthiness. So, while the inquiry remains visible, its influence fades over time. This means you don't need to worry about a hard inquiry affecting your score for the entire 2-year period. Lenders use hard inquiries to assess your creditworthiness. They want to know if you're likely to repay borrowed money. By reviewing your credit report, they can see your payment history, outstanding debts, and previous credit applications. This helps them make informed decisions about approving your loan or credit card application. Understanding this process can help you prepare for future credit applications. Let's look at some common situations where hard inquiries occur. Applying for a credit card, taking out a car loan, or seeking a mortgage are all instances that trigger hard inquiries. Even some apartment rental applications may require a hard inquiry. Each time you apply for new credit, expect a hard inquiry to be added to your report. Being mindful of these situations can help you manage your credit wisely. Soft inquiries are different. They happen when you check your own credit, when an employer runs a background check, or when a company pre-approves you for an offer. These inquiries don't affect your credit score and aren't visible to lenders reviewing your report. Knowing which actions trigger soft inquiries can help you avoid unnecessary worry about your credit score. Applying for several credit accounts in a short period can result in multiple hard inquiries. Lenders may interpret this as a sign that you're seeking more debt than you can handle. This could make them hesitant to approve your application. To avoid this, space out your credit applications and only apply when necessary. This strategy helps maintain a healthy credit profile. When you're shopping for the best rates on a loan, credit bureaus may treat multiple inquiries as a single event. This is called rate shopping. If you apply for several loans within a short window, usually 14 to 45 days, only one inquiry affects your score. This allows you to compare offers without hurting your credit. Understanding this exception can help you make smarter financial decisions. You can check your own credit report without triggering a hard inquiry. This is considered a soft inquiry and won't affect your score. Regularly reviewing your credit report helps you spot errors, monitor your credit health, and stay informed about your financial status. You're entitled to a free credit report annually from each major bureau. Take advantage of this to keep your credit in good shape. Your credit report contains several sections, including personal information, credit accounts, payment history, and inquiries. Hard inquiries are listed in a specific section, making it easy for lenders to see when you've applied for new credit. Understanding the structure of your report helps you know where to look for hard inquiries and monitor their impact. Hard inquiries can't be removed unless they're the result of fraud or unauthorized activity. If you spot a hard inquiry you didn't authorize, contact the credit bureau and file a dispute. Otherwise, legitimate inquiries will remain on your report for up to 2 years. Being vigilant helps protect your credit from errors and fraud. Fraudulent hard inquiries can damage your credit. If someone applies for credit in your name without permission, it's essential to act quickly. Contact the credit bureau, file a dispute, and consider placing a fraud alert on your report. This helps prevent further unauthorized activity and protects your financial reputation. To dispute an unauthorized hard inquiry, gather evidence and contact the credit bureau. Provide documentation showing the inquiry was not approved by you. The bureau will investigate and, if confirmed, remove the inquiry from your report. This process helps maintain the accuracy of your credit history. If your score drops due to hard inquiries, don't worry. The impact is temporary, and your score can recover with responsible credit management. Pay bills on time, keep credit balances low, and avoid unnecessary applications. Over time, your score will improve, and hard inquiries will become less significant. Applying for credit responsibly is key to maintaining a healthy score. Only apply when necessary, research lenders, and understand their requirements. Avoid multiple applications in a short period. This approach minimizes hard inquiries and keeps your credit profile strong. Regularly monitoring your credit health helps you stay informed and proactive. Use free annual credit reports to check for errors, review inquiries, and track your progress. This habit empowers you to make smart financial decisions and protect your credit from unexpected issues. Errors on your credit report can affect your score. Review your report carefully for mistakes, including unauthorized hard inquiries. If you find errors, contact the bureau and file a dispute. Correcting mistakes ensures your credit history is accurate and protects your financial reputation. Credit bureaus collect and maintain your credit information, including hard inquiries. They provide lenders with your credit report when you apply for new credit. Understanding the role of credit bureaus helps you know where to turn if you need to dispute an inquiry or check your report. From a lender's perspective, hard inquiries are a way to gauge your financial behavior. Multiple recent inquiries may signal risk, while a few spaced-out inquiries are normal. Lenders use this information to decide whether to approve your application and what terms to offer. Understanding their viewpoint can help you manage your credit wisely. The timing of hard inquiries matters. Recent inquiries are more influential than older ones. Lenders focus on inquiries from the past 6 months when evaluating applications. As time passes, older inquiries lose their impact and your score recovers. Being mindful of timing helps you plan credit applications strategically. Hard inquiries can influence loan approval. If you have too many recent inquiries, lenders may hesitate to approve your application. They want to ensure you're not overextending yourself. Keeping inquiries to a minimum increases your chances of getting approved and receiving favorable terms. Applying for multiple credit cards in a short period can lower your approval chances. Lenders see this as a sign you're seeking more debt. Space out applications and only apply for cards you truly need. This strategy helps maintain a strong credit profile and increases your chances of approval. When applying for a mortgage, hard inquiries are inevitable. However, credit bureaus allow rate shopping, so multiple inquiries within a short window count as one. This helps you compare offers without hurting your score. Understanding this can make the mortgage process less stressful and more efficient. Car loan applications also trigger hard inquiries. Like mortgages, rate shopping applies, so multiple inquiries within a short period count as one. This allows you to shop for the best deal without damaging your credit. Plan your applications within the rate shopping window for optimal results. Some apartment rental applications require a hard inquiry. Landlords want to assess your creditworthiness before approving your lease. This inquiry is recorded on your credit report, but its impact is usually minor. Be aware of this when applying for rentals and plan accordingly. Applying for student loans can also result in hard inquiries. Lenders check your credit to determine eligibility and terms. While this inquiry is noted on your report, its impact is generally small. Responsible borrowing and timely payments help offset any negative effects. Personal loan applications trigger hard inquiries as lenders evaluate your creditworthiness. This inquiry is recorded on your report and may cause a slight dip in your score. Applying only when necessary and managing your credit responsibly helps minimize the impact. Business loan applications may also result in hard inquiries. Lenders check your personal and business credit to assess risk. This inquiry is recorded and can affect your score. Responsible application strategies help maintain a strong credit profile for both personal and business needs. Employment background checks may involve soft inquiries, not hard ones. Employers review your credit for hiring decisions, but these checks don't affect your score. Understanding this distinction helps you prepare for job applications without worrying about your credit. Insurance companies may check your credit, but these are usually soft inquiries. They help determine premiums and eligibility, but don't affect your score. Knowing this can help you navigate insurance applications confidently. Applying for utility services like electricity or water may trigger a hard inquiry. Providers check your credit to assess risk. This inquiry is recorded, but its impact is minor. Being aware of this helps you plan for new service applications. Cell phone service providers may check your credit with a hard inquiry. This helps them determine eligibility and terms. The inquiry is recorded, but its effect on your score is usually small. Responsible credit management offsets any negative impact. Applying for store credit cards triggers a hard inquiry. Retailers check your credit to determine eligibility. This inquiry is recorded and may cause a slight dip in your score. Apply only for cards you need to minimize the impact. Requesting a credit limit increase may trigger a hard inquiry, depending on the lender. Some lenders use a soft inquiry, while others use a hard one. Check with your lender before requesting an increase to understand the potential impact. Over time, the impact of hard inquiries fades. After a few months, their influence on your score diminishes. After 2 years, they disappear from your report entirely. Responsible credit management ensures your score remains strong despite occasional inquiries. To summarize, hard inquiries are a normal part of credit management. They occur when you apply for new credit and are recorded on your report. Their impact is temporary and fades over time. Responsible credit habits help you minimize their effects and maintain a healthy score. Here are some tips for managing hard inquiries. Apply for credit only when necessary, space out applications, monitor your credit report, and dispute unauthorized inquiries. These strategies help you keep your credit score strong and avoid unnecessary dips. Let's clarify the concept of a hard inquiry. It's a credit check initiated by a lender when you apply for new credit. This inquiry is recorded on your credit report and can affect your score. Understanding this concept is essential for managing your credit wisely. A soft inquiry is a credit check that doesn't affect your score. It occurs when you check your own credit or when a company pre-approves you for an offer. Soft inquiries are not visible to lenders and don't impact your creditworthiness. Your credit score is a numerical representation of your creditworthiness. It's calculated based on your payment history, credit utilization, length of credit history, types of credit, and recent inquiries. Hard inquiries can cause a temporary dip, but responsible credit management helps maintain a strong score. In conclusion, hard inquiries are a routine part of credit management. They occur when you apply for new credit and are recorded on your report. Their impact is temporary, and with responsible habits, you can maintain a healthy credit score. Stay informed, monitor your report, and apply for credit wisely to keep your financial future secure.